Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Wednesday morning. I'm Prashant. With me, my colleagues Sonia and Nigel. It's a Thursday morning. It's a Wednesday morning.
I was wondering, I'm like...
Sometimes you say something and you realize, so I got it.
I generally trust you more than I trust myself with the data. So I thought maybe it's Wednesday morning.
Well, I corrected myself.
Okay.
How are things? Looking up?
I don't know. I hope yesterday was not a flash in the pan. It looked really good yesterday, and sometimes things sort of just turn around. I don't know. The SGX Nifty is indicating that it may not be a great start today, but you never know.
I mean, Sonia, I think the market will try and attempt the pullback, right? The simple reason is that it's very unlikely that these bounces last for just one day. So that attempt will be there. The question is, will it be successful? Let's just kind of, as always, start where we left off overnight. So not a pretty picture, right? So the markets here in India, the Nifty, Bank Nifty, etc., have no help from global markets. That's point number one. No help, no support. And the reason is very simple. You had US equities which started facing selling pressure right at the word go as soon as the bell rung overnight. And there were attempts at a bounce, but all of them failed. The Dow ended absolutely flat. The S&P was down 0.4 and the Nasdaq was down 0.6, 0.67% or so as well. Now, the problem is that the US 10-year, and, last 2 days we were saying how the US 10-year perhaps is stalling. It's not quite going to 4%. You can still say it, but the fact is we did hit 4%. We closed at 3.99% practically at the day's high, about 7 basis points higher, day on day, right? So this is worrying. And this basically shows that market pricing of what the Fed will do is increasing quite sharply. Let me give you a statistic. The market pricing of where the Fed funds rate will be by July of this year stands at between 5.5% to 5.7%. 1 month back, 0% expected the Fed funds rate to cross 5.5% by July. So it just shows you now 40% is neither here nor there, but the fact is it's moved up. Markets are repricing themselves to expect higher rates, which perhaps stay higher for longer. The dollar index is the next one. Day on day it was down, which is overnight compared to the previous day, but it hit 104. The low was near 104. It left off at about 104.4. So again, there was a push which came through on the opposite side, the direction you don't want it to go. Data is the problem. Data is still strong. So the prices paid component of the US ISM manufacturing index was strong. In Europe, you had the German consumer price inflation number, which beat expectations. And these are two data points. Germany is the largest economy in Europe, which pushed yields up both in US and Europe. I have to say though, that especially in the US, if you look at what bonds are doing, they're extreme yields, basically. Rates are extremely overbought, very, very overbought. So it's ripe for a pullback. Where it happens, etc., is anyone's guess at this stage. Now, let's come to the market here. As I said, it's likely that at lower levels, SGX is indicating a lower start. I was looking at the FI flow number that was negative. Some 400 crores net sell. It's likely that after yesterday, at lower levels, there is the impulse to try and buy the dip, which continues. After all, it was only the first positive close we had on the Nifty yesterday after 8 sessions. How much of it is successful is the question. So there is where the resistance has come in at. So the Nifty closed at 17,450. The resistance for the Nifty comes in at retracements of the recent fall, the last 5 or 6 days of fall, the high to the low. The first resistance comes in at close to 17,600, 591 to be precise. And then there is the golden retracement, the 61.8%, which comes in at about 17,700. The exact numbers are on your screen, but 17,600, 17,700, those are the two resistance levels. We closed at 17,450. So there may be a little bit of room. Now, banks outperformed supports for the, similar way, supports for the Nifty come in at 17,400 and 17,255. The 200-day and the recent low was 17,255. So those are supports. Banks outperformed yesterday again, although the index did end, and the index ended higher. Bank Nifty closed at 40,698. The resistance, again, retracement of the recent fall comes in at 4790. about 90 points away from where we are on the Bank Nifty. And then it comes in at 41,070 on the way up. And on the way down, as I've been saying, and it has not happened, 39,600 is the big level, which should not be violated for these kind of pullback hopes to remain well and alive. So that's the setup. As I said, no help from the globe, but maybe at lower levels, the attempt, the impulse to try and see this, try and stretch how far this pullback that we saw yesterday goes, perhaps is well and alive. Sonia, hi.
Absolutely. So the initial tick will be on the downside, right? I mean, the SGX Nifty is now at the lowest point, down almost about 50 points. So that's the big question that we're asking this morning. Will the pullback that we saw yesterday, will it sustain, or is it just a dead cat bounce that we saw in the market? Now, there are some positive cues as we wake up today. The FI selling has reduced quite a bit. And yesterday, as we know, the Nifty ended its 8-day losing streak. FIs barely sold about 420 crores in the cash market. So that's a good thing. Also, the Nifty is now well above the 200-day moving average of 17,384. So whether we hold on to that, time will tell. But at least that psychological mark has been conquered on the upside. The next resistance is 17,500. So we'll watch for that. A couple of other things. The Bank Nifty has actually recovered quite a bit from its lows as well. From its 52-week low, the Bank Nifty is now up over 20%. So there is some ground being covered on the upside over there. But it is definitely this 10-year yield that is dominating, mind space. The US 10-year yield has hit that 4% mark for the first time since November. So higher interest rate fear still exists in the market, and that could keep a cap on the upside for global markets. Brent crude continues to trend higher as well. It's now at $84 plus, so we'll watch out for that very closely. And in things to watch, Adani Group stock saw good recovery yesterday. The Supreme Court verdict on the Hindenburg report comes out today, so all eyes will be on that 10:30 onwards. But apart from that, for the market itself, million-dollar question, right? The pullback that we saw yesterday, will it sustain? See, the texture of this market has been very weak. So perhaps you'll want to wait and watch a couple of days before taking that firm call. But for now, the start looks like it's going to be in the red.
Well, guys, yesterday we partied, right? So it was good. But what
How hard, Nigel, last night?
No,
Nigel had a good evening.
Weekdays, not too. But the market's partied, right? But what's next? Is it
Metaphorically partied.
Is it the after party, or is it a hangover?
I mean, I think
what comes? So we'll know today.
Yeah, we'll know today.
We'll know today. So yesterday the Nifty participated, but the Asian equity markets itself, well, they were partying. So in that context, actually the Indian markets relatively underperformed, but nonetheless we broke that 8-session losing streak, so that's heartening. We've conquered the 200 EMA on a closing basis, so that's good. And the Nifty Bank, that's the one that's led the way. The ideal scenario will be if the Nifty Bank can head towards the 20 DMA, that's what will give the Nifty for the legs. But the biggest positive for me this week is the broader markets have outperformed, and they continue to do that. Both the mid-cap and the small-cap indices yesterday as well, we did see a relative outperformance. The reason we went higher yesterday is because the market was heavily short. So there was some short covering both on the Nifty and the Nifty Bank. But in terms of the PCR, when it cools down to around 0.7 odd, that's normally a buy signal. That played out yesterday. Now it's closer to around that 1 odd mark. What do the FIs do? Well, they added some long positions. After a while, they added close to 7,000 long contracts, though they continue to remain net short with their short positioning at around 82% odd. They bought some puts in case things go wrong, but the good news is they wrote puts as well. In an uptrending market, you want to see put writing. So between the 17,400 put and the 17,350 put, they added close to around 1 crore shares. Now, since today's weekly expiry, let's look at the two strikes that have the highest open interest. On the upside, the 17,500 call, it has more than 1 crore shares out there. And on the downside, you have the 17,400 put that has close to around 1 crore shares on. So you deduct that 25 rupees from around that 17,400 put, and you'll see that the bulls, well, they'll want to defend the 17,375 odd mark, which is important. The 20 DMA is at around 17,390. We're going to start off closer to around the 20 DMA. You'll want to defend that mark. The bulls will want to defend that mark. And on the upside, the Nifty Bank will want to move towards the 20 DMA, which is closer to around the 41,000 odd mark. Start in the red, but the bulls will come in to fight for that, for that 200 DMA, which is around those levels where we're likely to start, given that yesterday we ended at around 17,450. So in the Nifty, context, we'll be starting a little below that, which is the 200 DMA. So let's see how this goes.
Okay, well, lots to watch out for today in terms of cues. Of course, the first tick will be on the downside. But before we start, let me just tell you what's lined up in the first half hour of the show. We'll get you updates from the market across the globe. Abhilash Narayan of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with market expert Anand Tandon. But first up, on the equity side, let's get you a view coming in from Sanjay Mukim of JP Morgan, who says that the management sentiment for most sectors for sales, volumes or margins has seen sequential moderation, barring staples and non-auto discretionary. Interestingly, the two large sectors, that is financials and IT, have also seen a minor moderation in management sentiment in December. He adds the management sentiment for the December quarter has been reflective of the Q3 result trends and slowing global macro environment, with adverse base effects impacting profit growth. Earnings growth remains concentrated in financials right now.
Okay, some money market views. Parul Mithil Sinha, Standard Chartered Bank, says the USD INR continued to trade in a range this week. She expects the 82.25 to 83.25 to a dollar range to hold next week as well. She adds positive March seasonality effects will be in focus even as dollar stays the key market driver.
Right, and on the bonds, Parul says that domestic yields rose this week, tracking a spike in global rates post the core PCE data. She expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.45. She says global rates will be the key market driver, with the US 10-year nearing the psychological 4% mark. She adds that heat wave-led domestic inflation trends in focus as well.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at Hero MotoCorp, Eicher Motors, Axis Bank, RVNL, BHAL, Titagar Wagons, HAL, Bharat Forge, Suntech Realty, and Electro Green Tech. Well, on the day, the SGX Nifty is suggesting a downtick. Well, we have most of these stocks that will be reacting to positive piece of news, so maybe they could relatively outperform.
Okay, Abhilash Narayan is now joining us, Senior Investment